In this video, I will show you the best buy and sell indicator for trading crypto, stocks, and Forex that will be making you crazy profits in 2023. The trading strategy with this tool is super smart, and honestly, I've never seen anyone use this indicator in the way I'm about to show you. So make sure you stay focused throughout the video and pay attention to all of the details, because by the end of it, you will be better than 95% of traders out there. And to prove that this method actually works, I will backtest it 100 times on the price of Ethereum versus USDT on the 5-minute time frame. Like, subscribe, and turn on those notifications so you don't miss out. Now without further ado, let's get into it. So this is what your chart will initially look like when you first log into TradingView.com. So in order to add our indicators to the chart, we need to first navigate up to our indicators tab and search for UT bot alerts, which is this one here by Quant Nomad. The following step is to access its settings by double clicking on it, or you can come up to the settings icon here. And in our input section, we're going to be changing our key value from 1 to 2 and our ATR period from 10 to 1. Then we're going to head over to our style section and disable our bar colors. This is a very simple buy and sell indicator similar to the super trend. Obviously, we're not going to be using this tool alone as it issues a lot of false signals. So let's add our second indicator that will help us filter out these bad signals, which is our exponential moving average, or our EMA. Make sure to set its length to 200, and then in our style section, we're going to be changing it to white and making it a little thicker. So the general rule is if the price action is above our EMA, we're only going to be looking to buy. And when the price action is positioned below our EMA, we're only going to be looking to sell. As we can see, this condition alone can eliminate a lot of false signals. However, this is still not enough, so in order to filter out the vast majority of these fake signals, we need to add one more indicator to our chart. And the indicator is called Smart Money Concepts, which is this one here by Zierman. And we're going to need to make some slight adjustments in the settings, so come across to it, and in our style section, we're going to be removing our tables. Then head over to the input section, and all we're going to be doing is making our premium and discount zones a little more visible. Now let me quickly explain what this indicator consists of. So first of all, we have these premium and discount zones. This is literally one of the most important things in this indicator because it shows at what price the market participants are looking to buy or sell the security. We also have this middle level. Technically, when the price action is moving under this level, the market is still being oversold. And if the price action is moving above this level, the security is considered as overbought. Besides these super useful features, this indicator also identifies the lows and the highs in the market. These labels that you see on the price chart stand for higher low, higher high, lower high, and lower low. And lastly, we do have our change of character label. It basically occurs when the price action is breaking the most recent higher high or the most recent lower low for the second time. Okay, now we have a general idea of what this indicator consists of. Let's move on to the entry conditions so that you can know exactly when to buy or sell. Okay, so for a valid long entry, you need to have the following conditions met. First, the price action must be positioned above our 200 EMA. Second, the UT bot alerts indicator must issue a new buy signal. Third, at the time the signal is issued, the candlestick must be closed below our middle level. This is to make sure that we're not entering any long trades when a security is being overbought. And the fourth condition is to have the price action making higher highs or higher lows. This is another confirmation that we're buying into a prevailing long trend. Once all of these conditions are met, you're going to be placing a buy stop order slightly above our current candlestick. If the buy order does not get executed on the very next candlestick, you're simply going to cancel it and wait for a better opportunity. The stop loss will be set at our most recent swing low, and you're going to be targeting 2 times the risk. Okay, we see that our order got triggered, and now we're officially in the trade. When the price action reaches a risk to reward ratio of 1 to 1, your stop loss is going to be moved to break even. This way we protect ourselves from taking any unnecessary losing trades. And as you can see, our trade turned out to be successful. Okay, here is another long example. So we see the price action is closed above our exponential moving average. The UT bot alert indicator issued a new buy signal. The candlestick is closed below our zero level, and the price action is making higher lows and higher highs. We see that the market initially reached a risk to reward ratio of 1:1, so we then would have been moving our stop loss to our break-even level, but for this example we see that we actually managed to move the whole way to our 2 risk to reward ratio. For short entries, the opposite rules must be met. First, the price action must be closed below our 200 EMA, the UT bot alerts must issue a new sell signal, and at the time the signal is issued, the candlestick must be closed above our zero level. This way we're making sure that the security is being overbought in a downtrend. And the final and fourth condition is to have our lower lows or lower highs printing. Once you have all of these conditions met, you're going to be placing a pending sell order slightly below the market price. The stop loss is going to be set at our most recent swing high, and you're going to be targeting 2 times the risk. As you can see in the very next candlestick, we managed to fill our order, and we are currently in a trade. We then managed to hit our first take profit target of 1:1 risk to reward, and we are moving our stop loss to our break-even level. As we can see, the rules are very simple, and we managed to hit another take profit target. Here is another short example. We see at the time the sell signal was issued, all of our conditions were met. By the way, traders, if the EMA is positioned at the middle of the range, this signals a ranging market, and you should avoid taking trades at this time. Okay, I hope the rules for this strategy are clear. Now let's move on to the backtesting to find out all the numbers behind. Alright, the backtesting is complete, and now here are the results. The win ratio for this strategy is 81%, and the profit and loss was 863%. We managed to find those 100 setups within 9 weeks. Our profit factor is 5.7, and we had 11 consecutive wins against 2 consecutive losses. Overall, the backtesting results look really promising. Definitely give this strategy a try, but make sure you forward test it with paper money first before trading it live. If you have any questions, please ask them down below. If you enjoyed, please leave a like, comment, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.